Craig Donohue with us from the CME Group. You know him, of course, in the derivatives space. Craig, I want to know the two-year strategy. Record revenues, great margins. You've got 3,000 employees. It seems to be a pretty good time. What's the two-year business plan for the CME Group?
Well, we're focused, Tom, on growing our business organically. As you can tell, we continue to post very strong results. We had record first quarter earnings, and we're continuing to grow and expand in all of our core businesses. We had growth across every one of our major asset classes. And for the next 2 years, we're focused on extending ourselves globally. We've got a great global distribution network. The CME Globex platform has extremely diverse customer participation in products. And so that's our primary focus, as well as extending ourselves into the over-the-counter derivative markets and index services.
Here's a chart, folks. Equities are so 2006. This is the anti-Donohue chart. New York Stock Exchange volume, and you can just see it sort of rolls over there. Do you agree with that statement, Craig, that equities are just so 2006, and derivatives and the products you're constructing, like spread products and the rest, that they're the future?
Well, I do agree with that. I mean, there's clearly increased need for risk management products and hedging products. And the thing that makes our business so growthful is the fact that we innovate new products all of the time in response to changes in the world. You mentioned, sovereign yield spread contracts. That's our latest initiative in the European market. But, constantly we're innovating new products, not only for trading, but for clearing as well.
I'm curious, let's call it horse before the cart or cart before the horse. When you do sovereign spreads like Italy to Germany, and then maybe you do Greece to Germany when you get brave and you get your systems down, do you go to the major firms and say, what do you want? Or are you sitting in Chicago trying to think up those ideas, and then you're essentially selling them to the street?
Well, sometimes it's both, but this is clearly a case where, we work very closely with our clients, and our clients give us great suggestions and very good ideas. This is an example of that. So, it's an iterative process, but we really pride ourselves on working with our clients, and we've really been the leading product innovator in financial markets for the last 40 or 50 years because of that.
Yeah, which brings us to the New York Stock Exchange and their challenges. Elegant chart, please bring it up here. Donohue considers derivatives and stocks. Your thoughts, please, on the travails of the New York Stock Exchange. What a wonderful building. What a wonderful museum. What's the Craig advice for Duncan?
Well, obviously I have a tremendous amount of respect for Duncan and the job that he's doing, and I don't want to be presumptuous in giving him advice, but I think what you're seeing in the market is a lot of exchanges want to increase their exposure to derivatives markets, and they want to decrease their exposure to cash equities markets for the reasons that you commented on, and the fact that I think it's a hyper-competitive market and very difficult to be innovative and to bring new sustainable competitive advantages forward. So, people are trying to emulate effectively what we've done, and we've built a great business.
Well, Craig, thank you so much. Congratulations on a great quarter. Craig Donohue, the CME Group, and you can see there that outperformance versus NYX by CME.